everyone, this is Paul Stewart here from Segmented Solutions. Just wanting to take you through the calculations for SSAS contributions for the tax year 2024-25. And everyone I speak to seems to be under the illusion that you can go back 3 years. But unfortunately, there's no such thing as time travel when it comes to pensions. When we're looking at SSAS contributions, everything that counts is the date and time of the actual contributions to the pension scheme. There's no going back. So this is where I'm going to explain carry forward and company contributions versus personal contributions. So first things first, you need to look at whereabouts the contributions are coming from. Like I say, you've got individual contributions and there are company contributions. And the reason why there's a difference is that companies are allowed to make contributions to occupational pension schemes on behalf of not just current members, but also future members, whereas individuals are only allowed to make contributions on behalf of themselves. So let's have a little look at how it works. First of all, we need to look at allocation. If we're looking at company contributions, there are two different places that the money can end up. If we're looking at a SSAS, the SSAS can have different types of funds. First of all, we could have a members fund, and in the current tax year, there could be a contribution of £60,000 into the members fund. However, a company, given the right circumstances and given the right profitability, could in fact put money into a general fund as long as the SSAS deed allows for that. And that general fund can be used to be allocated towards members at some point in the future. So when you ask what is the maximum that can be contributed, obviously the first and most important thing is to consider whereabouts the money is coming from. So it all starts by looking at the current year. We're in 24-25, the tax year, and at the moment the maximum contribution allowance is £60,000. However, the next question is, do you have pensions that have been in existence, not necessarily contributed to, but they exist for the tax years 2021, 22 and 23? So for example, if you have a personal pension that you took out in 2013, that will still be in existence, so therefore you will have pensions available in 21, 22, 23. If, however, you have no other pensions at all from any source, then this is it. This is your maximum allowable contribution. It's 60,000. And again, there's a caveat that's dependent upon your earnings, but we'll come on to that later. However, let's assume that you have got a pension, personal pension from 2013. The first thing is we're bringing forwards any unused allowances from 2021. This is the 3 years ago bit. We're bringing it forward. You're not going back in time. And then once you've used that up, you can bring forward 2022, 23. And if you're able to use that up, you can then bring forward 2023, 24. So we've got allowances from the current year, 60,000, and then we've got another 2 lots of 40 plus a 60. Now all of those allowances are available given the right circumstances. So let's first of all work out what the unused allowances are. So you take this year first, and then you look at the previous first year that you come to, which is 2021-22, and in this particular example we're going to only have £10,000 left. And then in 2022-23 we're going to have £26,000 left, and in 2023-24 there'll be £20,000 left. And all of these years take into account contributions that were made in those years, either personally and or from companies. So you need to add them all up, add them all together to work out what has been used and therefore what is unused. And then all of those allowances, all added together in this particular scenario, come to £116,000. And with all those allowances, that would be perhaps the maximum that you could contribute. However, there is a limit, and the limit is 100% of your earnings in the tax year 2024-25. So we're going to look at an example where someone has earnings that are below this 116,000, because if you don't have earnings of 116,000 in the tax year 2024-25, you're not going to be able to use up all of those allowances. So we're going to compare what your allowances are with your earned income. So we've got the allowances, they're 116,000 in this example. And so we're going to look at the earnings, and let's assume that in this particular case, the earnings came to £70,000. What does that mean? Well, first of all, the £70,000 lets you use up the current year, 2024-25, which is 60,000. So you've used that all up and there's nothing left. And then you go back 3 years and you start to fill those up. So we're using effectively the whole of that 10,000 allowance that was available from 2021-22. So those 2 years are now completely used up. There's nothing left. However, you do have the 2022-23 and the 23-24. So there's allowances that remain unused because you're limited in your earnings. Now, if you're a director of a company, your company is allowed to award you extra bonuses and extra remuneration because of your work that you do within your company. And you've got to be careful to make sure that's commercial and that you actually have done the work. So, for example, if your company rents property and it's just investment income, you can't actually award yourself a massive, great, huge bonus because you haven't actually earned it. It's unearned, it's rental income. So again, there's a little bit of sitting down and working out what bonuses you can award yourself. But if you're employed, just a straightforward employee, then you can't do that. And that's the difference between being an employee and being a director. You do have flexibility as a director to sit down and have a board meeting to decide to declare yourself some bigger earnings, because in this case your earnings are only 70 and you've still got some unused allowances available. Now let's move on to companies, because when it comes to companies and you've got a multi-person, two members or more multi-person SSAS, it's about the company in terms of its affordability and what's commercial. If your company makes 14 to 15 million pounds a year profit, putting some money into a SSAS, even if you put in more than the member's allowable maximum of 70,000, that's not going to affect the company from a financial perspective. So you need to sit down and say, what's commercial for the company in terms of setting money aside? Because given the right circumstances, there's a general fund inside the SSAS, and if the company can afford it, it might be able to say, this year we're going to pay £70,000 to the member, but we're also going to put £75,000 into the general fund. And again, as long as it's done on a fully commercial basis and it's not going to put the company at financial risk, then that's perfectly acceptable. And that £75,000 extra will still get corporation tax relief, but it will sit in the general fund until it's allocated. And it might be that you get new members added to the scheme and you can then allocate money from the general fund to them, or it might be that in some years there's no profit, so you can actually allocate from the general fund across to individual members. So when I'm asked what's the maximum that can be contributed, it's not just as simple as saying there's £60,000 as an allowance. Really important, as a quick summary, this was a very, very quick whiz through. I haven't taken into account high earners, people who are earning £200,000 plus. They have their allowances tapered. That's a completely separate subject. I'm just talking here for the majority of people who are looking at contributions to a SSAS, where they don't earn above the 200,000. You cannot go back in time, but what you can do is you can bring forward unused contribution allowances. And the day that you make the contribution is what drives the tax relief. If you make a contribution today, it's in the 2024-25 tax year, and you have to have the earnings to be able to justify it. And from a company perspective, it depends on their accounting period. And it will sit in this year's current accounting period. It will not affect last year's accounting period because you can't time travel. Unless your company makes a loss, in which case the losses from an accountancy perspective can be carried back. But pension contributions cannot. I hope that's of some help. Like I say, it's a really quick run through, but it gives you the information that you need to start gathering the numbers so that you can work out what the contribution should be for your SSAS. Obviously, for the clients that I look after, if you give me the figures, I'll be able to work it through. But I need to know what you've earned, what you have paid in previous years, and also what the company profits are. So hope that's of some help. My name is Paul Stewart. I run Segmented Solutions. We provide SSASs and SSAS technical support. I've got a digital business card which the QR code picks up, and there's a whole selection of SSAS videos in there. And if you're looking for the documentation and explainer video on how to open a SSAS, if you go to segmentedsolutions.co.uk/SSAS, everything is on that page there. Hope that was of some use. All the very best. Thanks very much. Bye.